All right, we'll go ahead and start the stream there. How's it going, Shin? But yeah, we'll just go to the daily chart and just do a quick rundown um, and why I've just kind of been sitting around with indices and the market. Um, I don't know how long you guys have been trading. This is just not a normal move in the market. I think it's the third biggest day ever behind some days in 2008, right? Something like that, percentage wise. And then I think point wise, the biggest day ever, which is a bit crazy. Let me go over the downside. So I was able to get a little exposure on this downside move on the monthly and daily fractal. So if you notice the start of a new week, we have that candle 3 closing very bearish. And why is it very bearish? Closing below the low and also a nice and bearish candle, right? So taking a look at that, we can expect expansion from where? The lower half. And so if we're taking a look in here, do we have anything in this area? We can use up close candles or just a fair value gap, right? So we're just expecting this fair value gap to push price lower. So I can either look to take an entry just in here, which is what I did, or you can just let that intra candle change in the state of delivery form, which then provides that continuation to the lows, right? And you see how those lows also line up with the standard deviations, right? Now here, I don't really know what's going on after this point, right? Because I don't have any higher time frame closure that lets me know that. So I'm mainly just watching this price action to see, okay, do we get expansion into expansion, which is a reversal to trade higher, or do we get a retracement to continue lower? And then mainly this market is just driven by Trump's decision on tariffs and all the other things. It's a bit hectic. Um, but if we're taking a look at this next candle, I was thinking we could get a continuation lower. That failed. Quite the massive day. So to me right now, this is looking more like a reversal to the upside. However, if I'm going to look to get on side with that, which I'm not currently, but into next week, I want to see one of these lows ran out early into next week, right? Because then that gives me a swing to trade off of. I can trade off of this swing, right? Technically, candle 2 here, candle 3. But when we have the largest range day ever, what do we expect after that, right? We could trade it back into the range, but consolidation or retracement, right? So I don't think I can fix indices. It's going to have to let it play out. Gold question when you get the chance. What chat? I'll go take a look at it. DM. Let me take a quick look. Okay, gold. What day is this? Yeah, just say in chat real quick what day it is, and I'll just walk through it. I don't want to read all the way through it and take up a bunch of time. I saw 30-minute on what day you're saying. I think it was yesterday. Thursday. Oh yeah, it's right here. Right? Gonna be this one. Let's talk about this. I think in my quick glance it was this. So bullish bias on gold. We can go over that after. But if we're taking a look here, let's go back. If we're looking for a swing to form, right? Why would I not expect this low to hold? Well, I expect this low to hold until we go take the highs to the left, right? Once we take these highs, then it can retrace back into the range. So if you're looking for a swing point to form, there is a low. Do we have a candle 2 closure? No, so we have to wait, right? Because it closed outside the previous candle. Now I look, do we have a candle 2 or a candle 3 closure? Well, we don't have a candle 2 because it never swept the low. And we have a very nice candle 3 closure, right? So now you could say this is a bit off-putting and it never swept out this low, and that's correct, right? So you could avoid it for that reason. However, if you are expecting price to expand and it's closing up here, you'd have to be pretty wrong for it to come sweep out that low and then go, right? So if you're pretty bullish bias, you can keep that into this next candle. And this is where you went down to that 30-minute and 3-minute, right? I'm on the right example. Yes, I am. Cool. So go down to the 3-minute here. And so looking at this, right? If we're expecting a low to form, we don't have any protected low in here, right? There's no swing low that I can trust. I see the swing low right here. Do I trust it? No, because it never ran out anything relevant, right? So going into the open of this new candle, I'm thinking I want to see this low ran out to look long, right? Let's see what happens. Okay. A bit of consolidation, and then it just starts to trade higher. This is not something I would consider, as to me, this is consolidation. And the reason my model is built this way is because the amount of times I've lost money trying to trade something like this, where we have a consolidation, it looks like a nice breakout, and then it comes back and sweeps out this low to then go. I'd rather just not take a loss and be patient and see if that occurs. Let's see. It does start to trade higher. So I think your question was, you didn't take this trade because this didn't run out anything relevant, and I would agree with that. It's just not something that I would consider, because the amount of times I'd take a loss on this, not worth it. Swept a little low. Yeah, you could, I mean, you can consider that, I suppose. So he's talking about this sweep here. Let me adjust this. He's talking about this sweep here and then that. I personally wouldn't. If I did want to trade it, then I would look for the continuation off of this, which would be this, right? This makes more sense to me, something like this, because this is a bit messy. Does it clean up a little? Fair value gap closes over. Does it respect 50%? Yeah. Right. So if I really wanted to trade it, I'm trading it here, right? And if I was going into this, I'm going into it expecting this move to occur at the open of the new candle. It happens a little bit before. That's fine. But I'm really unlikely to take a trade in this area. If I wanted to, could in here, but it's still not ideal. Yeah, if the draw is super clear for you and you have a strong bias, then that's when something like this entry makes sense. I still wouldn't be taking an entry in here or on the retest, because you go back to here. Obviously, we know what happens now. If you're looking at this and you're like, hey, would you bet money this low holds? I wouldn't, right? So it's like, then I need to let the entry sequence form or the swing point. Does that make sense? So I think you approached it in a good way. Okay, cool. Is this gold trade valid today? 30-minute 3. You're trying to take a short, 10 a.m. Let's go take a look. This one, right? The first thing I'll mention is trying to short gold here is a bit difficult. It's pretty trendy. But going into this, let's work through, let me double check this is the right one. And that my audio is going. It is cool. 9:30. Yeah. And you look to take the fourth candle. Okay, we can go over a few things here. So if you have the flow chart, you can go ahead and pull it up. Do we have a relevant point of interest? We do. We have swept out this high. Right? Do we have a candle 2 closure? We do. We swept out the previous close below. So then now we'd go down to the lower time frame. We'll go to the 3. Move these drawings. Now I want to see, do I have a change in the state of delivery? I do, because I go find this high, find the high there, this series of up close candles that made it. In this case, this one. Could use these as well. Mechanically, it'll just be that. So going into this next candle, we'll have a little box here that says, hey, I could be looking short from this area. Right? It takes the overlap. So looking at that, I want to see if we can open, make a high in here, close below these candles to trade it lower. Let's see. Okay, not doing that. So at this point, this isn't something I'm looking at. Why? It's not that it can't reverse here and trade lower. It's that if it reverses and trades lower, it's really unlikely for me that it just expands, right? So I'd rather let this candle form and close and then want to see the second one. So what would I want to see for that? I'd want to see this go close near the lows, right? As a reversal candle. Let's see as we get into the next candle. Okay, so here we are in the next candle. And this isn't the best close, but it can be a reversal. If we're going to reverse here, where do we need to reverse off of? 0.5 of this wick. Right? Why 0.5 of the wick and not the whole candle? Well, we're going to be opening up above the candle. Right? So 0.5 of that wick. So if we drag that over onto our screen, we want to see this area be respected. It's about the highest it could trade. And so if I really wanted to get on side, it'd have to be open, reach above there, close below here, trade it lower. Okay. So now this is something where I could look to take an entry in here if I really wanted to. I stop here and then trade lower. But before we continue, there's two things that you might notice, and let me know if anyone can spot them before I tell you what they are. One of them is on the higher time frame candles, the other is on the lower time frame. And then I will explain both, but I want to see if anyone knows. Yeah, exactly. So the first one, we're taking a look at our higher time frame candles. It already swept out this previous candle's low, right? And when it does that, we don't really want to see it trade back in, right? We want to see it fall through these lows. So that's the first one. Let me see if anyone got the second one. The second one is on this lower time frame, right? And that is the phases of price, right? So if we're expecting this to continue lower, we want to see what? Expansion, a retracement, expansion. We would want to see a retracement to expand lower, right? And you see how this is a retracement. It's a very slow, weak move up, then trade lower. So if I'm expecting this to trade lower and I see us expand and then met with expansion, right? That's when I can wait another candle and see if we form a swing here and start to trade away. Because the way this is looking is aggressive down, aggressive up. That could be a bullish reversal. And I'm not necessarily meaning this all the time, but when it's paired with this higher time frame candle. So I want to see, how do we trade on this next candle above that? Okay. At this point, this would be about the only one I would consider, and that's a bit late into the candle, but it would look something like this. And I don't even think I would take it, because now at this point, what do you notice? You notice on the good examples, this would have just closed here and then falls and it trends. What are we doing at this point? Now we are consolidating, right? So we're trying to trade a consolidation. Let's see what happens. Right, and then it fails, right? So the main things I would talk about here is just that lower time frame and it already taking out this previous candle's low, if that's helpful. Yeah, exactly, it's a consolidation. Yeah, have a good weekend. But does that make sense? Let me go. Alex? Okay, cool. Yeah, it's just a few things. Like mechanically, you followed the process pretty well. I would say if you want to take a few notes on this, we'll go back here and I'm just going to clean it up. If we're going to form a reversal, let's do that. If we're going to form a continuation here, sure, we can reach up into here, but we want to see that open high early into the candle, right? So we don't want to see price hang around in here, do whatever. We want to see open high, trade below the low, expands lower, right? So when we see that halfway through the candle, we're doing nothing, that's a bit concerning, right? So it's like, yeah, I could look to try to trade these continuation entries, right? As I showed, like that. But even that is like, look when we should be taking this trade versus we're kind of chasing it in a consolidation versus if I'm looking to trade a continuation here, I want to trade it when it's already trending. Right? That's the whole point of the model, is to trade a trending market. In that case, you wouldn't be waiting for a lower level where you can take the trade. We form a new opposing candle in C3. So let me explain that a little better. Sorry about that. Mechanically, you can use this level here as it traded higher, closed below, right? But you can notice it's just not a very clean reversal. Like even this reversal is not very clean, right? Like if we go find a clean reversal, like this is something that I like to see on a reversal is we have a nice low, high, close below the low, trades lower, right? You see the difference in this reversal with the structure of that V shape, up, down, versus if we look up here, it's up, down, up, down. See what I mean? Yeah, so the main goal is you want to see that intra-candle change in the state of delivery early into the candle. Because what that does is, let's go back here, and we'll replay this. If we have that occur, fix my screen here. If we're expecting this candle to expand, how much time do we have? Of 30 minutes, right? Because these are 30-minute candles. That means we have this time window here for price to expand. So if price goes and forms the high in the beginning parts of it, now we have all this time here to expand or to trend, right? Because let's see, close below there, then it can expand lower, right? Versus if we go and hang around up here, that's why I was saying, even if we reverse here, it's unlikely to expand because how much time do we have left? Are we really going to go expand and make all this candles range in 2 to 5 minutes? It's unlikely, right? So that's why I'm always saying I want to be entering earlier into the candle, right? In around the opening price. And what I mean by that is I'm not trying to enter the wick high or anything like that. I'm not trying to catch the highs. I'm just wanting to enter around that opening price, right? Because then my stop loss can be on the wick, basically. Entry, stop, trading that lower. All the live streams, they're recorded and put into the WAP. If you go into the courses section in WAP and go to live stream or recording library, they are all there organized by date and who streamed. Does that make sense, Chala? T, so taking ICCSD and candle pour is pretty discretionary. Not really, it's not really discretionary, I would say. I mean, this isn't a great example, but it's still applying. We'll just go to this random one, right? Now, generally, I would have wanted this to occur here, right? So if we could just take this and move it over 6 minutes, that'd be great. But it's still the same process, right? Price opens, trades lower into a point of interest, moving on a low, then closing over, right? And then I can look to trade that higher. And the whole reason this works is I'm letting this wick form. So once the wick forms, then I can get on side, expecting it to expand higher, right? But you see how this one, why wouldn't I want to enter it? See how late into the candle this is? This is occurring with how much time left? 6 minutes left. I'm better off waiting for this candle to form and try to catch this wick, right? But then this is candle 5 in which I don't look for it. But like, yeah, it doesn't do much. But does that make sense? It's in the WAP. I don't know if anyone can send a try a different browser if you're getting an error code. NQES 30-minute 3 after 8:30 closed today. 2 to 1 but got stop break even. Yeah, let's go take a look. Did you take it on NQ or ES? Because then that's the one I'll focus on. NQ, cool. And you said what time? Yes, that is correct. Let's see, 8:30 closed today. All right, I'm not gonna look at it, so I can just do it how it would be. All right, so you said 30-minute. We'll go out here to 30-minute. And I let that play a bit ahead on accident. We'll rewind. So the only thing I'm not a fan of here is, unless you said there's SMT. Yeah. So the only thing I'm not a fan of here is I would prefer us to have some sort of high taken out, right? Or an SMT here, right? That's preferred. If you have the logic of we've already formed the high in this 6 a.m. candle, sure. It's just I prefer to trade off of those protected highs, right? But going down to the 3-minute, so it's missing the point of interest. It's the only thing I can really say there. But it looks good because we're closing below here as well. Right? So if we're expecting price to trade lower, we have this level here as well as half of this level, right? So going down to the 3-minute, we'll leave that level there. See, what do we get? We're expecting price to open, we make a high, and then trade it lower. Now the one thing I'll talk about here is you can see this is the low it's marking out. We're pretty close to that low. So it's kind of hard to, I want to be able to move to break even or partial at these lows, depending on how it trades through. But let's see how it trades higher. Here it's either going to just tap into this area or into this fair value gap. That's where I'd prefer to make the high and trade lower. I don't want to see it trade all the way up there generally. Let's see. Okay, cool. So I'm assuming you took your entry on this close. And here, you stop there or there. And something lower. So the only thing about taking something like this is, yes, it can be valid. And it's good if your directional bias is correct, right? It's bad if your directional bias isn't correct, because here's what's going to happen. Your directional bias is wrong, we're going to take out this low, trade higher. Your directional bias is right, should take this low, and then continue, right? Right, it's either going to expand into the low, expand back out, which is a reversal, expand, retrace, or expand to consolidate. Let's see what happens. So you took, let me see what you did. I took 2 to 1, but got stopped. Where did you get stopped to break even here? What is a preferred fair value up, high, lower OB? So in my course, if you go through it, I'm always going to be focused on fair value gaps or highs to be taken out, right? If I have neither, then I'll use an OB. I didn't use this as an OB. That's not technically an OB for me because we never reach a valid point of interest. It's just for me, I'm not expecting price to trade all the way up here. So if it's not going to trade up there, it's going to get stopped by this, right? Which is, we can go down to the lower time frame. It's going to be a swing point, right? That's a bit messy, but swing point, right? So it's just retesting structure. But I'm a bit confused on where you got stopped to break even here. Oh, you said you took 2 to 1. I took a 2 to 1 and then you got stopped to break even? Or can you explain that? I took a break even since I was looking for a large range day. I think my mindset was wrong going into today. Yeah, I mean, to be fair, this is like a very solid trade. Targeting this -1 or 2R. Right, and you have failure swings. So we could see these lows. We did take lows to the left. Let's see how it works. The only thing is, if it's like, if I'm going to be taking this trade and I'm not taking out here, technically I can't really go to break even yet because where's my protected high? We haven't put in a new one, right? So it's only if I partial out would I go to break even. If not, I expect we can hold this area. Yeah, but it's like, oh, I went through that quick. Sorry, let me replay. After this close, then I could move break even, right? Because we had a protected high. Do we form a new protected high? We reach into a point of interest. Fair value gap here. And then we close below. So now we have a new protected high, in which case I can trail my stop to break even or to there. right? And then it comes and runs me back out. Or I just get ran out, right? But I would say main thing here is you have the model down, like that actual pattern. It's just the framework and market conditions. So if you take a look, right, we have a pretty crazy large day. And then even our inside day here is 1,500 points. So it's like, to me, I don't know, the market's a bit wild lately, but to me, it's like, it's consolidating now. We go to like an hour or 4 hour, right? We take a look, large range. Now we're just stuck in this range. So it's like in here, it's like I'm not trying to hold winners to the fences. I'm just trying to make money. For point of interest, okay, answered that one. Does that help, JT? We had SMT with 830, so I was expecting 930 to continue. I mean, you got to pay attention. I mean, it would have already ran you out, but you want to use that higher time frame closures to confirm, because let's say you took partials and then you're like expecting 930 to continue lower. You want to see this 30-minute candle close down here, right? Where does it close? It closes as, oh, we're going, oh, we're on the hourly chart. Makes sense. Let me go to 30. Oh, 30 did close decent. Yeah, I mean, it's not a bad idea to think it trades lower. It's just choppy. I got confused there because I was on the 30 when I thought I was on the, or I was on the hour when I thought it was the 30. Right? So that's fine to think that it's gonna go lower. It's just you have to accept the fact that it's 930 can run you out. Yeah. It's a lot easier, like here, ready? Look at our hourly here. You think it's a lot easier to catch a trade and write it out in these conditions? It looks like that. Or something like that. Or that. Or even this. You see what I mean? So I think it's just market conditions, if you can anticipate the consolidation. Is it possible to explain when an asset is lagging? Sure. So it's just like, you can, when I refer to an asset as lagging, I mean its whole, like the whole index is lagging behind the whole move. So I'm not referring to, let's say we had an SMT here. I don't know. I'm not saying, oh, because we took this high on ES, but we didn't here, NQ's lagging. I would just say NQ's weaker, right? When I refer to lagging, I mean something, and it's generally if I'm referring to YM, where let's say we're having a very bullish directional move like this, right? On ES and NQ, they're both trading higher. And then the Dow or YM is just hanging around. I would say the Dow is lagging, because if this is the real move, it still has to make it, right? It should still make it. So then it's just lagging. And then that's where it's like, you'll hear ICT say like the six sister concept, right? It's just going to catch up once it's feeling it. But I don't really use that too much. I wouldn't really say it's, I'll sometimes say like, if NASDAQ is very bullish and the ES is hanging behind, I'm like, oh, ES is lagging. I don't really use it much. Please check 5 a.m. C3 1 hour to 5 minute view. Let's go take a look. 1 hour. 3 a.m. Yeah, that's a sick one. Right? So this is valid, right? We open the new day. Not the biggest fan of it going open, low here, right? Generally, if I'm trying to short London, it's like I would generally just want to hang around, then make that move, right? Because then we have all these failure swings versus that's, I gotta do. Anyone knows why it's doing? Hold up, I'm just gonna. But that's the only thing I'll notice. But going in here, See what it looks like. I haven't seen it, so it will be exactly as I see it. Cool. Sweeping out this high, tracing into there. So let's see if we can get a move lower. Go to the 5 minute. Let me explain for people back. I don't know why my chart clicked on the 1 hour and it was on the 5. We have a valid point of interest right here. We have a valid candle closure. Now we can go down to the lower time frame, 5 minute chart. Now from here, do I have a change in the state of delivery? No, I do not yet. So it's there. And this is a bit concerning because generally you want that change in the state of delivery in this wick here, right? Because then it allows you to get on side near the opening price of this candle to trade it lower. Now at this point, it's like price already has to trade pretty much as an expansion candle just to change the state of delivery. Let's see. There it changes the state of delivery. Now if I want to get on side with a continuation here, it would have to be a swing point in here for me. Right, so what I would be looking for here, I don't know how you traded it, but I'm just gonna do it as I would. Let's see if we get a closure. Oh yeah, I don't think I'm gonna touch this. I'd be waiting for, yeah. That's I don't know if I would take this one. If it left this low, I would take it. But once again, it's like consolidation, expansion lower, expansion back up, just as I talked about, right? So let's see if I miss a move. That would have worked. Yeah, so it would have worked. It's just something I wouldn't take. Right, so really the only trade I see in here would be this. What threw me off was what I explained in one of the previous examples of this, where we consolidate, expand out, expand back in. Right, and I don't have a super strong directional bias. If you did, I would take something like this, or as we get into 4 o'clock, you would have to be letting that wick high form, which you're not going to get on side with that, personally. I guess the only other way to do it is see if another entry forms here. But then now if you're looking, this candle went open low, trading back into here. Another swing forms. I don't trust that. Yeah, I wouldn't catch that right there, personally. I don't know. I don't have long targets here. If you had long targets, it could make sense. I'm just not a fan of this reversal here, so I'm like more cautious in the area. It's like you could trade that. It closes in there. It's just now you're taking out this low. It doesn't make sense. So, like I said, this would be the one. Even then, you'd have to have a pretty strong bias for me to take that. I guess also if you wanted to limit this. But once again, it requires you to have a pretty strong bias. Let me see what you're saying. Yeah, I think you're completely fine with, let's see. I don't know how you traded it. Oh, 5 a.m. to the upside. Well, you guys just got a totally random example. All right, let's go to 5 a.m. All right. Yeah, so the same thing is we opened, we made the low. So your reasoning for the trade was the reason I didn't like the bearish example, so that's cool. So right there. And then candle 3 closure. Right there. Just gonna clean up the chart here. But I Not a huge fan of candle 3 closures that open up inside of a bearish point of interest, but go back to the 5-minute and see what's up. Yeah. I mean, I would be using this one. It's a bit tough. If you wanted this to hold, you have to have that hold there. The main reason why I don't like candle 3 closures as much is because you're trading after an expansion versus after a reversal. So it's where you can get caught up. Now, takes its high. See if any setup forms, reaches into there, forms a swing, bit deeper. If it was a bit deeper, you could consider just taking it. So let's see. Trust it. All right. I'm assuming you took this then. That. Yeah. I mean, it is valid. I'm just not the biggest fan because expansion. Is this going to be consolidation or retracement? I always feel late. That's why I miss most of these moves. Yeah, that's not ideal. Yeah. So that's the short-term targets there. But that's the main reason I don't like these continuations, because let's do a little lesson here. This is our, I don't talk about this much because it's kind of built into the model, but let's talk about it. This is our dealing range, right? There to there. Sorry for these nasty colors. I don't know why they're on there, but anyways, this is our range, right? Because this is our swing low. This would be the candle 2, right? To our high that formed that. So we go back to our hour. Our high, our candle 2 to our high, right? That's like our dealing range. So if you guys, how advanced do you want me to get in this? I can get pretty advanced, or I can keep it pretty simple, or I can do both. Advanced as possible. Okay, cool. We'll do simple, and then we'll go into advanced, right? So simply put, if this is our range, right, I'm focused on wanting to buy in the low of it, right? Right. So it just makes sense, right? If we're trying to trade to this high, I don't want to be buying right here, right, with the target there. Right? I want to buy here so I can have runners go up there. That makes sense. And then anyone clarify? In the chat, does that make sense? Cool. Right. So I don't talk about this much because it's built into the model, because, hey, the model is saying, let this reversal form, trade the continuation. Candle 2, you're almost always opening up right here. So I try to keep it simple. Now, if you understand market maker models and grading price swings, you will understand that these levels here are significant in certain things, right? This is generally your low risk buy. Your silver bullet, or those first and second stage, are right around the 50%, right? I want to be buying in this area. And if you go do this, you can go take a look. Most of the time, my model's right here, right? So when I see price trade all the way up here, it's a bit high for me to where I want to be buying, right? So that's a way to keep you out of it. Let's go back to this example here, this bearish one we went over, right? Let's do the same thing. That's our high, that's our low that made the high, right? Where was our low risk buy or low risk sell? Right in here, right? That's technically our low risk sell, right? That's the reversal that everyone tries to catch, which I'm like, oh, I'll just let that form right after this. So where does my model generally form? Right in here. So if we know that, go ahead and put back up the indicator. And you'll see, right? This is already the area that I'm looking for, right? Makes sense. So it's called grading price swings. It's kind of an advanced concept. It's not super necessary to know. We can go to the daily chart on something and just show you what I mean. Or actually, let's do it on the monthly. Right? So we are here on the monthly. If I'm bearish, right, I'm going to be looking at the high to the low that made that high. Right there. And I'll draw out these lines. Our low risk sell will form there. Right. I'm generally looking in this area. Right, so now we'll go to our daily. This one just hangs around, does nothing. There's that. And you see how this is the ideal part for my model to form because we're selling in this little range here. Right. So this is like advanced stuff that's like built into my model. I just don't really talk about because for 95% of people, it's just going to confuse. Right. Right. Cool. I mean, it's built into the model, so I'd honestly say don't worry about it too much. Right. But we can do it on anything. Ready? We go find this swing here. We are bearish, right? This is the one from the course, actually. So I can mark out from this high to this low. I generally want to be selling in there. I take a look. We'll put the indicator on. Where's the sell form? Right there. Right. That just it's overlapping conflict. But really, all you need to know from that is if you're just looking, let's say you're trading the hourly here. It's more simple to just put is, hey, I don't want to be shorting below lows, right? Or longing above highs. I think if you remember it that way, it's going to be a lot easier. But you can go to anything. It's a bullish one. So it would be from here to here. Drag it over. Let's see where the model forms in there. Go. Right in there. Right? This is the low risk buy, and that's why I wouldn't likely be trading it. And then right there, doesn't close over, so it doesn't print a continuation signal. But you see how we're taking a look in this area, right there. That makes sense. Right? Or it's on the verge of not making sense because it's too high up. Right? Like this little bit here can make sense. But you can really clean up your chart and just take a look and be saying, hey, if I'm trying to trade to these highs here, does it make more sense to be in lower or in higher, right? And the whole thing with my model is I'm not trying to catch the low. I'm going to let it trade away and then try to get in on the way there, but I don't want to be right at the end of it. Which model is the one you trade the most? I only trade my fractal model. That's it. Like everything you'll see me do, that's all my model. It's the same thing. But that's grading price swings. It's interesting. I used to do it, but with my model, it's kind of just built in. I realized it's something I took out. So this is not loading it. But it's just understanding ranges. Right? So that's the advanced move. Which times? I just trade New York AM session. The settings on it, it's just 0 to 1 and then 0.25. Just the very basics. 4 tiles. but you would mark it on your higher time frame chart. So if you're trading the 5-minute, right, it's based off the hourly, right? So you're gonna mark it on the hourly, like right here, this candle 3 closure. Where would I mark out? Mark out from this high to that low. Look, that's on the 30-minute. I'll go to this, and you'll see model form already printed. Right? And so see how, not letting me replay, you see how the model is forming here. Granted, it doesn't sweep out the low, so I wouldn't trust it in there. I need that. But the whole thing of, hey, I'm buying in the lower part of the range to try to trade it higher. What makes a high probability trade? Very simply, it's just a few things. So it's a directional bias. So I can say on the daily, I have an area or a reason to be looking lower. Then all I want to do is align that with a fractal model on lower time frame. So bearish fractal model. In this, I do prefer the H1M5 or 30. Right? And so what does that do? Well, if my bias is down and we form a swing, if price is going to continue to trend, it should leave this bit higher. So that's the whole idea behind my model. You always start at the hour with the indicator and then jump to the, yeah, so mainly I don't use the indicator on my higher time frame, right? Generally, like here on the, we can just go over this one here. I will use it to show the daily time. Like I just do this just so I can see the daily chart. But like here, for example, right? I have the previous equilibrium marked out. I'm like, okay, there. I'm not trying to use or have a bunch of indicators on here, right here, because I need to make decisions. Right? Once I make a decision here, that's when I can say, oh, I have a closure. Now I can go look at the lower time frame. Where so many people go wrong is they go sit on the lower time frame and they're always trying to find this reason instead of just waiting for the closure. Right? And I don't know if anyone in chat wants to be honest, but how many of you have tried to go lower before the closure and then you get ran out before it goes? I don't do C2 entries, but, and for the reason I just gave you, but we can talk about it. 30-minute, DL 30-minute at what? You mean in here? Like in this candle? Within my model, like I said, I'm not going to participate in this reversal candle, right? And that just saves me losses. Sure, I'm going to miss some moves. Let's say you're going with an expansion logic. Sure, you can look to take this because it frames its reversal off its previous high and then has a change in the stage delivery. So if you're trading it like that, by your decision, like you're going to be trading something like this, right? Or you could say, okay, I still want to trade it. I'll wait for a continuation entry. That's like the only way you could trade it in here. But once again, I'm just going to be waiting for a continuation, which would be following candle. And you can see that's where it prints. Okay, it just wicked all the way up there. So now I expect this to trade lower. But for me, like I said, let's go back to this, what we were just kind of going over. From this high to this low, I ideally want to be selling somewhere in this area. See how that one makes sense? Now we're already below the low. It's like, this is not where I generally like to sell. And if I do, I need another continuation off of this. It would have to have been like something like that. But this is something I just accept I miss. Oh, like that. If it didn't already like go sweep out lows, that's what I like to see. Because now it's respecting high, low, high, if it makes a lower low if the trend continues. Right, and then from there I can say, oh, did we get a closure below? But obviously, look, we just hit our max expansion on one. We're below lows. Doesn't make sense to short it. But if you got that, that's cool. It's just a variation of my model that I don't trade. Yeah, if you sit, yeah, I've talked about that on a lot of one-on-one sessions where if you just don't sit on the lower time frames, you're not going to stress yourself out as much. And that's coming from someone who used to trade the 15-second time frame like a crackhead. I've been struggling when to get in on C3, afraid of them missing the move. I mean, it's normal to be afraid of missing moves. Now, I'm just going to do a diagram for you. Really, the easiest way, and I think if you go into Fractal Chat and talk to some people, the easiest way is like this. This is candle 1, candle 2, 3. Is, what do I say? I want to be in around the opening price, right? So somewhere in here, right? And I want to be in early into the candle. What do I mean by early? It's kind of subjective, right? And you can just, if you want to simply just use half the candle, say, hey, I want to be entering around this area, right? So then all I want to look for is a reached lower into a point of interest, and then that intra candle change in the state of delivery. And then that allows me to trade this higher. And I think you'd be surprised after you study it for a while. You're not really missing a lot of moves letting this wick form. If you're really worried about missing moves and it doesn't work for you, do the same thing, but instead of waiting for this intra candle change in the state of delivery, right? Wait for a swing right here and get on side like this. Then you should really never miss a move. The only thing here, you're going to have a lower strike rate. You're going to stop out of more trades. I'm a bit stuck on the fractal now. Don't know what to look for exactly on the higher time frame. But I would focus just on candle 2 closures. So just really, this is the best way to backtest something. Go here on the hourly and say, okay, where did price expand? Where could I get in a trade? That makes sense to me, right? And you just go cherry pick something, right? And you're like, I don't know why I'm doing oil. You know, probably the worst of the choices I could have had. But something like that, cool. 10 a.m. Spotted. Now I'm just going to go down here and say, okay, I need to study how I could get on side with this. I'm just going to go down here, go to the 5. And I'm just going to practice seeing what it looks like, saying, okay, here's the reversal. How could I get on side with this? Right? There it reaches lower, right? There we close through. I expect that to hold. Continuation. You just sit here and say, would I have looked to take an entry there, or what would I have done? Right? And you just practice that way. Don't try to just jump in real time because you're just going to get caught up. I don't know the exact stream that I went over it and did a bunch of it, but if anyone remembers that stream or it's somewhere in chat, can you link it? Because I showed how to reverse engineer backtesting. You got an entry in C2. No, I don't enter C2. If you go read the flowchart, it starts with a candle closure. So I have to have that. Garrett took this trade. I don't know what he did for that SMT there. Unless my timings are off. Second candle. I don't know. I'll have to take a look at that. But we are coming up on just an hour. Big O, if you want to shoot me a message in chat, I'll get to that. But I do have to go and make some dinner. So if you guys have any other questions, we can get to those otherwise quickly. Otherwise, I'm going to get this finished and then I'll upload it in the recording section. It's well, going well. I don't know if I missed your reaction to review my trade. Let me see it real quick. Did you throw it in here? On DAX? Can you tag me in it? We'll review it really quick and then that'll be the last thing I do on this stream. I definitely missed it. Oh, right there. Found it. What you did wrong, DAX. Okay, this will be the last one we review. And then we'll hop off. Is it just DAX index? German index? Go take a look. Wow, this is a bit gappy, hey? Yo, that is a crazy drop. A bit more crazy than the indices. When was this that you traded it? Okay. Do I not have? Am I on the right one? This looks like crap. Like this, yeah, this looks a bit terrible. Okay, let me try that. German 30. Yeah, that looks a bit better. I mean, this is very similar to just indices, yeah? It's kind of the same thing I was talking about here where, yes, we have a candle to the upside here. We just expanded a ridiculous amount. Now it's a consolidation, and then we're just within this range. Now, if it would have swept out this high, or I don't know what is used for SMT, if that swept out the high, then you can have a framework to trade this lower. But let me see real quick what you did again, and we'll talk it over. Oh, for some reason yours. Oh, okay. So what you need to go review is what is a candle 2 or a candle 3 closure. Because for this to be a candle 3 closure, it has to go close below the body of candle 2. Right? So this is candle 2 because it made the high. For this to be a candle 3 closure, it has to close below the body. So that's your mistake there. And the other thing to talk about there, we'll go to the hour. This is kind of what we talked about earlier into this is where were you trying to trade this? Am I not on the hour? Hold up, let me. Oh yeah, right here. So the other thing I want to talk about is, once again, if I'm trying to short in here, right? I don't want to short below lows. It already took out this low, right? So it already took out our target. So it's like, is this a valid candle closure? Yeah, this is a great candle closure, an ideal candle closure. It sweeps, closes below the body, right? Now, why isn't this actually ideal? It's because it's happening after we take out a low at the low of the range. If this low wasn't taken out here, and that occurs, this occurs right here. Oh yeah, that's a great trade, right? So it's more so just conditions, and we already took out the target, right? That makes sense? Yeah. I mean, if we go to the 5-minute, it probably looks decent. Yeah, once again. This is where? Yeah, right in here. Once again, this isn't super amazing. Okay, let's let this form. Right. I don't want to see open, high. At this point, we're already pretty low in the range. You see that? Go back to what we were talking about. Yeah, we're in the low of the range. I want to be shorting up here, but it has it. So unless it open low, at this point it's too late into the candle. Right now you have this candle close. So I think what you took is here. I would just say we already took out the targets, right? That's the main thing. If these were equal lows here, right? Let's say it looked like this. It looked like that. Then I would say, yeah, you have a point here. Right? It's just that it already got taken out. Yeah, and it's pretty low into the range. All right, I'm gonna go ahead and end it there. I hope you guys have a good weekend. Let me know if you need anything. And if I missed your message, just go ahead and double tag me in chat and I will get to those later. So hope you have a good rest of your day. See you guys.